Shannon from alphatrends.net. Today's Friday, the 17th of December, 2021. I hope you had a good week in the market. It was certainly a volatile one, and we ended up, for the most part, with losses. You can see the notable exception there was the biotech index, which was up close to 5% this week, just bringing them back into positive territory year to date. So nothing really to celebrate there. Just some short squeeze rallying and some bargain hunting more than anything. But broader markets basically down 2 to 3%. So let's take a look at the charts and see what's going on here. The weekly chart of the S&P 500, clearly it's still in an uptrend, but we're starting to see a lot more potential distribution up here as we see, volatility tends to peak at turning points and diminish with trends. It doesn't mean we have to top out here. We're still innocent until proven guilty on this weekly time frame. You can still see that, this is the most recent relevant higher low, and that occurred right at the rising 20-week moving average. Over to the daily time frame, we're also holding that rising 50-day moving average on a daily basis, and the volume weighted average price from this prior low, that is in October, and the volume weighted average price from this peak was where we had actually seen the lower low. So, next week, what do we have? We're going into next week, we're below the declining 5-day moving average, and that puts us on caution. We had a breakout, and from that failed move has come a fast move lower so far, very similar to the move that we saw back here. So that's twice that we've kind of broken out recently and immediately got rejected, and saw that sellers took an opportunity to meet those higher prices with supply. So if we can stabilize in here, that's a good thing. But going into next week below the declining 5-day moving average, I consider it guilty till proven innocent, and we're going to need to get back above 466.5 or so just to become neutral. The Nasdaq, I had pointed out on Twitter a potential scenario for bullishness this week, which didn't come to fruition. And it's always good to know what the possible scenarios are, but we wait for price confirmation before we actually get involved. Here on the daily time frame, we're holding the volume weighted average price off this peak that we've been talking about for the last several weeks. That is from the September high. That's that red line, and you can see we came down to that once again today. The 50-day moving average is still rising. That's the thinner green line in there. The thicker green line is the volume weighted average price off of this recent low. So we're in an area that is supposed to hold as support. However, when we look at the 15-minute time frame, we're below a declining 5-day moving average, and we can't trust it. What we saw, heading into this just today, I had pointed out on Thursday the possibility of a potential turnaround, that we saw the big move off the Fed meeting, and I wanted to see it pull back in here, find some footing, see that 5-day moving average turn higher, and then go on to break this band of support. Instead, we saw that the market just failed. So being on the sidelines waiting for a bullish scenario is not a bad thing. It's certainly better than being the dip buyer who buys blindly into a perceived level of support prior to there's actual evidence of it becoming support. By the way, I'm going to do some stocks here at the end of this and show you some ideas on the long and short side for next week, so stay tuned for those. And if you're watching this on YouTube, please give it a like and subscribe to the channel. That, I am told, helps the ratings and get it out there to more people. Anyways, longer term, we're in an area where it seems like it should slow down, but we can't trust it yet because the price action doesn't confirm that. So next week, I'd like to at least see some stabilization in this market. The Russell 2000 was higher today, but again, lower on the week and still acting like garbage. We made another lower low in here, and we're seeing heavier volume at these turning points. Perhaps we're running out of supply, and if we are, then it's at a logical place in that, using the anchored volume weighted handoff, we saw the low from the COVID, and then we touched that volume weighted average price there, so we anchor another volume weighted average price off that level, and when that was hit and we bounced from it, we anchor another one here. Well, this is where we are right now. We're right on that and this band of support. I'd really like to see us undercut this low slightly. That would be the ideal scenarios, if we were to undercut this low and then come down quickly and back up for a reversal. Now, I don't think it would turn this Russell 2000 completely around, but I think that if we were to undercut this low and you would get uneducated short sellers in there, and it set off probably another wave of stops, and then the more educated money would cover their shorts, and sideline money, once it starts to, if it were to start to rally from there, would jump aboard, myself probably included, I hope, with a stop, of course, and look for a rally back up maybe towards the midpoint of this range. But for now, it's still just garbage. It's in a downtrend. It's guilty till proven innocent. It's maybe starting to stabilize a little bit. We had seen last week that the volume weighted average price from the high was met almost perfectly, and that's where we saw supply. So this was a scenario I was drawing out as a potential bullish scenario for this market. And there's zero evidence of it. We're maybe going to begin to stabilize in here, but it's just, the jury's out. There's just too many cross currents to really make a meaningful stand in this market right now in either direction. Semiconductors are breaking down a little bit further. Today we lost a little bit of ground and undercut the volume weighted average price from this gap and closed under it for the first time since that, and that puts into play the volume weighted average price from the October low, which in this area is where we also see that rising 50-day moving average. So I wouldn't be surprised to see it come down maybe even under 290 next week, and that's 5 points lower from here. A lot of volatility, and again, this is the Federal Reserve reaction, and then of course on Thursday we saw it gave that all back and then some. This leaves a feeling of people being trapped in here, and short sellers realize that, they start to pile on. If we're to break down below here, I think you'd see a quick move to 290 next week, so be careful with the semis. They've been leaders, but they can't lead forever, I don't think. The biotechs did make it up through this prior band of support and right up to the declining 50-day moving average. On the weekly time frame, weeks ago I had sketched this out, that I would have liked to seen kind of what I was just talking about in the Russell 2000 is an undercut of the prior low, and then you often get a rally. So this rally, it's a rally within a downtrend. We still have lower highs and lower lows. We have a declining 50-day moving average, so I don't see anything to get excited about. If you're a very short-term trader, perhaps you participated in this strength here today. It came right off that 5-day moving average. I didn't even consider it as a trade candidate, truthfully, so it's just really not of interest to me. Financials are kind of a mess. The 20 days below the 50-day moving average, that 50-day moving average is just starting to flatten out right here as we average this data against where we were 50 days ago. So further profit taking in there wouldn't be a surprise. Maybe down to this trend line, something like that, down towards the 38 level looks reasonable. How about some stocks to look at? These are, I'm just going to go briefly over these. These are the names that I'm going to analyze more carefully for Alpha Trend subscribers in my Sunday video. We do, ideas every day, before the market in terms of swing trade candidates, and this is one that might need a little bit more time to set up AVTR. It trades 3.5 million shares a day. You can see we've had a band of resistance in here, and it's a little bit choppy as well. But on the positive side, we're holding the volume weighted average price from the test of the year-to-date VWAP right in here. That's also this high kind of come together, and that's where those buyers have emerged on these deeper pullbacks recently. The 50-day moving average will flatten out on Tuesday of next week as we get rid of this data. This is right now 51 days ago right here. So Monday we get rid of this data. Tuesday we'll get rid of that data. That means the 50-day moving average will be advancing. Looking at a 30-minute time frame, it's a little, actually let's look at the 65. It's kind of choppy in here, and that's the problem. We've got this band of resistance up in here, and you certainly don't want to chase extended moves into there. What we'd rather see is, right now, if it were to break out, you'd have to have your stop on your here. I'd prefer to see a couple days in here, break it, and then maybe use a stop somewhere in that area. Another potential long is BW. Here's a nice looking weekly chart. Definitely has some room to run, maybe up towards that 13 level, just a nice pullback, and you could even look at this on the weekly time frame as a big cup and handle right here, and now it's forming a flag. Within that, we've got a rising 20, 30, and 40-week moving average onto the daily time frame. The 20-day is declining. That'll change about middle of next week. We're holding the rising 50-day moving average. We're above the volume-weighted average price from this low right here, and you can see how that's been important. And as far as the volume-weighted average price off the peak, that's still declining. So it tells me this stock is probably a little bit early. Take the VWAP off of this gap and off of that high, and a scenario would be maybe something like this in the next week or so. Carve out a nice higher low, get that 5-day moving average rising, then break this band of resistance up here with these VWAPs. Get involved as it goes above here with a stop under that, something like that. F5 is another one. It's in a nice uptrend. It had broken past this resistance from that volume weighted average price. It's back above the 20-day moving average. The weekly time frame is certainly a bullish look to it. We're back above the rising 5-day moving average. Maybe above here, maybe above this little peak right here with a stop under there would be a way to look at it. These aren't, I'm not giving anyone suggestions. I'm just putting some names on your radar. NEWR, bullish, obviously, big break higher. Nice controlled pullback here on the weekly. The daily, it's right down to the rising 50-day moving average and kind of pinching right now between the 20 and the 50-day moving average. It trades an average of 800,000 shares per day on the 30-minute time frame. We're below that volume weighted average price off the peak. So what we might end up doing is something like, this. And then if I were to buy it, somewhere like this, maybe at this point with a stop under here or just under that 5-day moving average, I think it would make a nice move up towards that volume weighted average price and most likely stall out there and either fail or rebuild, a level of support, and that ties in with this level here and then continue higher. So it might stair step up to that, which would be a nice trade, consolidate, and then if it still had the energy and the market was a little bit healthier, perhaps Newer could be able to continue to move higher. This is one I've had my eye on for a while. This is a name I've had my eye on. Nice rising lows here, energy compressing within this ascending triangle with a rising 20, 30, and 40-week moving average. Daily time frame here we can see it's been a little bit choppy. We had a shakeout this week. It looks like that which didn't kill it here on this shakeout might make it stronger, but we've still got that declining 5-day moving average here in the 30-minute time frame. So it probably needs to get back up into here, create a higher low, and then if we were to break a stop under here is the way I'd like that to set up. PLAB is one that's looking behaves well. Here's our weekly chart, so clearly bullish. Let's look at the monthly. So it's got room to run, it looks like. The daily time frame, again, it's holding on nicely. It kind of got back above these key volume weighted average price levels this week, so perhaps above here with a stop underneath that 5-day moving average. If it broke down first and then came up through it, that's a completely different setup. I'd reevaluate it, and that's why I update these each and every day for Alpha Trend subscribers. SIMO is another one. SIMO clearly in a stronger weekly uptrend. The daily time frame, it had a big volume event right here, lighter volume on this consolidation that we've been talking about. The volume weighted average price off of the gap from that volume the volume weighted average price from that gap, you can see we're holding back above that. It's created a little bit of a band of resistance in here recently. I was looking at it as a potential move earlier this week. It didn't do that, but now we're going to get rid of this data Monday. That means that once we get rid of this data right here in the first 2 hours of the day, that's going to turn this 5-day moving average flat to higher as long as we stay in here. So if it was to do something like this, I think that would be a great scenario for worst case stop under here. Ideally, it would make that higher low break here and a stop under that level. How about the short side? Because this is a two-way market. Very similar to what we did with the Russell 2000 with those VWAP handoffs. We have the original one, then where it last touches, then where it last touches that volume weighted average price. And again, we layer those volume weighted average price levels. This prior support is acting as resistance with a declining 20 and 30 week moving average. The daily time frame, there's that band of support that's now becoming resistance. That's also the year-to-date volume weighted average price, a declining 20 and 50-day moving average. I don't always go so fast on these, but I'm trying to cover a lot. So again, if this is what I do for Alpha Trend subscribers. subscribers every day in more detail. But this one's clearly breaking down. It doesn't look like it's my ally. It looks like the ally of a short seller because it's hanging right here on this cliff. And the nice thing is, on Friday we saw a little bit of a recovery after that gap lower. Maybe shorting below here with a stop above Friday's high. How about DXC? Here's another one that we can start our volume weighted average price at that key level. It last touched there, so we layer a VWAP and then layer another one here. And notice how that one turned from support to resistance. Now this one is holding a support, and it keeps hammering on it, which weakens that level and makes it more likely that it's going to fail. Or we have a declining 20 and 50-day moving average. We have a declining year-to-date volume weighted average price. These are all clues that this stock is being sold heavily by institutions. Now when we look at the 30-minute time frame, we really see the stock in a bigger range here with resistance recently up in here and support in there. So it's going to take some time for a real breakdown. I'd like to see it do something like this and then break down. NWS, what's the news here? Well, the news is we have a volume weighted average price off that low, and then it touched right here. So we layer one, and look at how that became support here, and that support now it's kind of pinballing between those, compressing, pinching, whatever you want to call it. But this one has been holding on a closing basis just until recently here, and we're hammering away at this little band of support. There's not very much volume that occurred in between here. That leaves a nice air pocket that if it's to break down quickly, it could break down quickly down towards that 19 level. Now it's only about 10%, but it still would be a nice trade. By the way, that Carvana, which I spoke about Monday, man, I missed that one because of a gap, but that one just got annihilated. Beautiful short sale. People who buy stocks like this in downtrends, just don't do it. You're going to lose your money. So the news here is that perhaps a little bit further consolidation before a decline. UNM is another one that's looking weak to me. Here's our volume weighted average price from the COVID low. Here's that last touch, and you can see we're closing below that. We're below this volume weighted average price from just recently. We can see that better on the daily time frame. That's that volume weighted average price. We're just on this volume weighted average price from the most recent low. Let's look at that on a shorter term time frame, multiple time frame and analysis. So what we're seeing is we saw the Fed move. From that failed move higher could come a fast move lower back below this level. If you were to get it with a stop up in here, that might be a way to look at UNM. And finally XPO is another one, same exact thing. We've got that volume weighted average price that we hand off, and then how we could put another one here and another one here, and we're starting to close below more of these volume weighted average price levels, which shows the sellers are gaining control and that they were below a declining 20 and 30 40 week moving average. Sellers are in control. It's a broken stock. It's going to most likely continue lower. The trend once established is more likely to continue than reverse, and the trend is your friend. So breaking below this week's low with a stop somewhere under here, that might be a good way to do it. Sorry it was such a long video. I usually try to keep them around 10 minutes or so. Thanks for tuning in.